Hey everybody, this is AJ with DIY Cost Seg. I have Carlotta Thompson here. She is a former IRS agent. So welcome, Carlotta. Great to have you here.
Thanks so much for
Um,
having me, AJ.
of course. So we do have a webinar that is coming up that could be watched live. It's also available right now, I believe, for $69, $79. What is that at, Carlotta?
I think it's $67
Okay.
if you want to have the all access pass, and it's a tax deduction. It's over 50 hours, or actually probably like 35 hours of content at
Yeah, I would
least.
say there's tons of speakers on it. Me and Randy, the co-owner of DIY Cost Seg, we're speaking, as well as tons of other people with a lot of good information that would be great for our audience. So we definitely wanted to make sure y'all had that info. We'll have that link down below in the email as well. So if you missed any of the info, you could just look right down there. We wanted just to get into some quick questions that we get a lot of the times, and we felt would be good questions for Carlotta with her, having that experience as an IRS agent. So Carlotta, the first thing that we get almost on a daily basis is, does a cost segregation study increase my chances of audit? What is your opinion, based on your experience?
Heck no. No increase. It's really the IRS uses percentages to bring out anything to do with an audit. They're looking at percentages of expenses accordingly to gross income,
Right.
but they really don't focus on depreciation because they have everything there that you're depreciating. And so high depreciation is usually definitely not looked at near as much as like high office expense. Okay.
Yeah.
Now I will tell you, there are some things that are high depreciation that the IRS does look at, like if you're trying to write off 100% of a plane or something like that. Planes are very suspect to the IRS.
Mhm.
But if you're just doing a house, right, you're breaking that house down actually into smaller pieces. And so they can see the whole form of everything you depreciated. So I think it lowers your chances because you're actually taking that house and spreading it out into multiple sections. So like
Right. Yep.
flooring, cabinets, improvements to the grounds, and so forth. And so you're actually lowering the price uh, per item. Does that make sense?
Exactly. Yeah, it totally does. So in our reports that you'll receive, you'll see that it's broken down into 3-year lives. So it's going to be your long life, which is 39 or 27 and a half year. The ones that you're looking for, that's going to be, what you want, your short life depreciation, that's going to be your 5 and your 15-year benefits. But essentially every component of your house is broken down into those different categories. And in each of those, pieces of the pie, so to speak, we have, every individual component. So it definitely gives a lot more detail for the IRS to look at. With that being said, we've also only been to audit 8 times in the 20 years that we've been doing the fully engineered studies, and we've successfully defended all of those. Most of the time when we see people go to audit, it's for something else that they've done in their taxes, and then everything goes, obviously. So that's when we've been, drawn into it. So awesome.
That's what I would say is usually they're going to pick 3 things. That's unless you're in an NRP audit, which is a research project, they'll look at every single thing on your return.
Okay.
But if you're not in a research project, they pick 3 usually classified issues, and usually they're not depreciation. It's usually, other expenses. And then you probably are getting, I mean, when I was an agent, I really never hardly hit depreciation unless they couldn't add up the numbers to reach the amount. It was never like, this is a 5-year, it should be a 7-year, or whatever. It's really like, oh, you put $200,000 on here. Can I just see that you spent 200,000? If they can't show that, that might be where you get depreciation audit, but otherwise, no.
I don't qualify for any bonus depreciation. Does a cost segregation study still make sense for me? And I'll lead off with that. And for the most part, yes, a cost seg has been going on for a long time now. I believe since the early 90s, if not longer than that. So it's always been around, and bonus depreciation has not always been around. So people have been doing cost seg, without 100% bonus. Is it as good of a benefit? No. But does it still make sense in a lot of scenarios? Yes.
Yeah.
So, that's based on our experience. Do you have any more insight into that, Carlotta, or?
I mean, what are the reasons they're not available to take bonus? What are you seeing as the reasons?
Well, so to take 100% bonus depreciation, you need to qualify per the IRS standards as a real estate professional. That does not mean that you have to be a real estate agent. It means that you have to spend 750 hours annually managing, working on, or in, on your investment portfolio. So some people are very hands off, so they don't technically qualify for that. And we've had clients this year that are still moving forward with cost seg studies, even though they don't qualify for the 100% bonus, just because they still have income from those rentals to offset, and it's still a great benefit for that.
I was going to say, it's probably because they don't have a tax strategist, because there's
Exactly. That's
several different ways that you can do that and
Yeah.
make it work still.
Mhm.
Pretty much all of my clients that have properties, we do a cost segregation on. So
Yes.
I bet it's more that they don't have a tax strategist helping them than it is that they don't qualify.
And that's
Because
totally what we've
definitely,
seen. We've had some people who have great tax strategists that are coming right to us saying, we already know that it still makes sense. And then we have others, who just don't have anybody helping them. And that's not the greatest situation most of the time.
no, I would say it always makes sense. There would be very, very rare situations where it doesn't.
Right.
And it carries over, right? So I would still do the segregation. And then what we teach, and you'll hear this in the summit, is our focus is on personal tax strategies first, which is things that you pay for personally, that could be a business expense. So like hiring your kids or renting your home to yourself.
Right.
And then we do business strategies, which are work opportunity credit or R&D credit, or those kinds of things. Then we do real estate strategies. And real estate strategies, always we do a cost segregation, because if you're on our path, you're probably going to buy something, and we can make those trigger in the next year if we can get them to trigger this year. So
Right. Yep.
I would say, number one, if someone's telling you don't need a cost segregation, you may want to look at getting just come to our summit, because you're going to learn so much. You're going to be like, oh my gosh, this makes so much sense. But I would say it never doesn't make sense. You may not can get it this year, but usually we can get it triggered in the next year. But if you don't do it this year, you can't trigger it next year, right? Like you can go backwards on this, but not, you still have to go back to the year that you could do it in. Does that make sense?
Yeah, it definitely does. And we can really transition right off of that into, if it's been more than 2 years since you filed your taxes, since you purchased and you haven't done a cost segregation study, you can still go back, even 5 years, 7 years. You need to see where that cutoff is in time that it makes sense financially to go back. But you could do something called a Form 3115 Section 481, and that's just a change in accounting method that allows your CPA to go back and say, hey, I didn't do cost segregation, I didn't take the depreciation, I'm going back and I'm doing that now. So it is a possibility to go back in time and look at that. So you're going to want to talk to your tax strategist and see, where does it make sense, in time for me to go back to a 10-year-old property, 15-year-old, there is a cutoff in time where it doesn't make sense anymore.
Yeah. And I say all the time, like, this is one of the strategies you can use going backwards. There's not very many. So make sure that if you had some high tax bills, that you talk to a strategist, because there definitely a lot of times it makes sense to go backwards. And this is the one thing. And another thing, AJ, you always hear that, oh, my accountant said I shouldn't do a cost segregation because it doesn't make sense for me, or it doesn't, it's too, there's not enough value there. But
Right.
like they're not that I think that in the old days these were so high, but your company has been the front runner in getting these lower price, where it's the DIY cost seg. So man,
We've
so
had people run them as low as a $30,000 cost basis and still be able to see a benefit from the study because of the price of our studies.
Yeah.
So that's really where DIY started from, was trying to hit that basis, and it's just grown from there, and we look forward to growing more. I sort of want to round off with Carlotta. Is there anything else, outside of Cost Seg, what else should, our clients be looking at doing, and what could they, potentially be learning in the webinar and this summit that's coming up? And, how else could they, be saving money on their taxes?
Well, obviously your list has people that has real estate, right?
Right.
And real estate is the great equalizer to everything tax. Okay. So you usually make your money in business, or in some kind of way, like W-2 wages business.
Yeah,
So,
working at Google, wherever, doing what.
right. Exactly. And then you equalize that with real estate. And so what we have put together in the summit is the different kinds of real estate. First of all, we talk about Real Estate Pro, how to get certified for that. But guys, like, even if you're not a real estate pro, that doesn't matter, because we've got what properties, we have our own investment thesis, if you will, of how to grow your portfolio where all of it offsets each other. So growing tax-free wealth, we talk about long-term rental, commercial real estate, Airbnb, apartments. We talk about everything in this summit of how exactly which kinds of properties you need to buy to offset whatever income you're trying to offset. And we have it all laid out for you of exactly where you need to go for that. There's also an upsell on the summit that is like $197, and it's called it's a tax obliteration workshop, and this thing has live deals in it. So if you're like, hey, I know that I need to do an Airbnb, but I don't have the time to go find an Airbnb, or I don't have the time to manage it, there's live deals. And usually I save those for my high-end mastermind, but there are some live deals on there. There's some deals for Airbnb, for commercial, and for long-term. So
Yeah, that's
so
right
that
up
is
the alley of our customer base as
crazy.
well. Yeah.
100%. I was like, you know what? People need live deals right now because they don't have time. If you're working at a W-2 job, your whole life is your job, right?
Yeah, yeah.
But yeah, there's some live deals that I put in there. So if you do come and you love all things real estate, buy that workshop, because I'm telling you, those deals that are on there are very, those are off market deals that I just have put together with people. I don't make any money off of it, but I was like, my clients need this, and we put it together. And so definitely, but there's so much you can learn. There's so much of this whole thing is real estate opportunity zones. Where the government a few years ago, that you used to could trade a car for a car. Well, they did away with that and gave us opportunity zones. So that's huge for real estate opportunity zones, 1031 exchanges. Obviously a lot of people hear about those. There's a trust person that I have partnered with. One of my backgrounds is trust and working on trust, like the Rockefeller type trust, that are from the old days, and using those in real estate. And most of the times you hear about those, they're scammy and they're not done correctly. So we actually have we have a whole presentation on those kinds of trusts and using those to your benefit. So tons of information.
That sounds like a broad spectrum, but all related back to that real estate subject.
Yeah.
So sounds like it'll bring a lot of value. Again, we will have all of that information linked down below in the description, in the email, wherever you're watching this. We will have that info provided for you. So go sign up, go ahead, watch it now, watch it live, whatever you want to do. Again, thank you, Carlotta, for stopping by and chatting with us. And we really appreciate your time.
Yeah, same here.
All right. Have a